Everyone is working hard for their paycheck and is mindful of the money that they're bringing home at the end of the day. But there are some people who want to have their money work for them. So I spoke with a financial expert about why and when it would be the right time for some people to invest in the market in a traditional sense, or if they want to go into cryptocurrency.
Money, it's printed in many places: Germany, Taiwan, Mexico, and of course here, the U.S. Plenty of people are protective of it, or maybe answering the bell to invest it.
If you are trying to stay ahead of inflation and trying to stay ahead of the prices of everything rising above you, a great way to stay ahead of that is by investing.
Ryan A. Hughes is the founder and portfolio manager of Bull Oak. It's a wealth management firm here in San Diego County.
It depends upon their own personal risk tolerance. Not everybody can be an investor, because when you are investing in the markets, you have to be willing to invest for the long term. Patience really is the key.
People may want to take the traditional route, put their money on Wall Street, or invest in cryptocurrency. Assuming you have an emergency fund squared away and you don't have credit card debt,
the best time to invest is by looking at history is today. Like, that is always going to be the best time.
I asked Hughes why some of his clients might be investing one way or the other.
They really fall under two different reasons. One is you invest in the traditional markets to prepare for the future. But I think a lot of people are investing in crypto because there's the building distrust in our governments.
Now crypto, like Bitcoin, is a digital currency that works independently from governments or central bank. Hughes tells me a devaluation of the US dollar is a reason why some might be going with crypto. But
you have to be very careful where you're actually putting your money. Do your research, do your homework, because not all are equal.
He also says it's a lot more volatile than stocks.
Stocks, typically, whenever there's a pullback, it'll pull back by about 25 or 30%. Whenever crypto pulls back, it'll pull back 70 to 80%.
Now, no one is telling you what to do with your hard-earned money. If you're unsure of which route to go, Hughes adds, given how new crypto is, it's unclear what the long-term outlook of the asset is compared to the traditional market.
I would say that you'd want to size your bets accordingly. You'd want to put the bulk of your lion's share in something that is proven, and maybe a small dabbled amount into something that is not quite proven yet, with the expectation that if this thing goes to zero and I lose all of it, I'm going to still be okay.
Ryan Hill, ABC 10 News.